So hello everyone, all the readers, welcome to this podcast. On this podcast, we are having an audio conversation with Mr. Siddhartha Garg. Mr. Siddharth is a lawyer based in Delhi. Formerly, he was a junior research scholar in the Law and Economics Department in University of California, Berkeley. And right now, he runs a small NGO called Angel Trust for Animal Care. So I'll ask Siddharth to give his introduction himself once again, and then we'll talk about investment bias and various kind of biases after that. So Siddharth, over to you. Please introduce once again yourself, and then we can get right into the topic.
Excellent. Hi Manish. Your introduction was absolutely spot on. My name is Siddhartha K Garg. I am a lawyer based in Delhi. I work in the Supreme Court with Mr. Prashant Bhushan, and I was formerly a junior research scholar in the Law and Economics Department of University of California, Berkeley.
Okay, that's great, Siddharth. So, as we had decided, we'll talk about biases and various kind of biases. So maybe you can just start with the topic. I have some understanding of it, but you are the expert, so let's go ahead. So can you start with telling the audience that what exactly is bias? When we say bias, what does it mean?
Okay, so there are a lot of technical definitions go around, but I'll really simplify it for your audience.
Okay.
A bias in our mind is simply an attraction to one of the various options we have, but without actually having a reason for that attraction. As in, we prefer one option over the other, but without inherent reason within that option, without a real distinction. And hence, it is called a bias, that we prefer something without any reason to it. I guess the simplest example I can give you, which you would notice yourself right now, is that if I ask you today, of the newspaper you read, how many positive stories do you remember and how many negative stories do you remember? And the first story which will come in your mind will be a negative story.
Okay.
Why is that? Because that is called a negativity bias in our brain. As in, we are automatically gravitated more towards negative news than positive news. Now, I'll deal in more detail with negativity bias as we go on. But so there are many biases like these in our brain. And the problem with that is, unless we correct them or even notice them, then they can make us take decisions which are suboptimal, affect your investment strategy, and lower your long-term wealth creation. Okay. Hence, these biases are very important to understand and correct, so that your wealth creation is not affected.
Okay. Can you let me know that when we don't think logically, when we are not rational, then are we biased? Can we say something like that? Like, what is the relation between biasness and thinking logically, thinking rationally? If you can,
You were exactly right. Basically, when we take a decision not based on the facts on a requirement, that is, it is a non-rational decision, that is a biased decision. Okay.
So, I think let's go into different kinds of biases. What we'll do is we are going to discuss 10 different kind of biases, top 10 biases. So, which one do you want to start with, Siddharth?
I say let's start with anchoring effect. I think this is one of the most famous biases out there.
Okay.
So, I'll quickly explain that first. Now, to explain anchoring effect, just imagine the anchor of a ship. As in, when a ship wants to stay to a particular place, it drops its anchor to the ocean floor and it just sticks over there. The ship stays over there.
Correct.
So similarly, the anchoring effect affects your brain. And to explain it, it's just best to go to the origin story. So what happened was, in a particular shop, electronic shop in US, there was this seller, and he wanted to sell, let's say, a $25 mixer grinder. And he put it on the shelf. He noticed there was hardly any sales. Then one day, accidentally, he put another mixer grinder next to it and placed the sticker of $100 on it. So now there are two. One is $25 and one is $100.
Correct.
He noticed after some time, the sale of the $25 mixer grinder shot off the roof. Everyone started purchasing it, and he wondered what happened. Then he realized that because he put the $100 mixer grinder next to it, that people did not look at the inherent value of the $25 mixer grinder. That is it expensive or is it not expensive? They just saw that it is next to $100. $100 is really expensive, so this must be definitely a okay buy. This is certainly a reasonable purchase. And they bought that. Another famous example is a very famous cafe in Italy. What they do in their menu, they actually have a Vespa scooter which you can purchase right then and there. Okay. So apart from having coffee, etc., they have one of those fancy scooters, a full Vespa scooters, which is for 800 euros almost. Now, they don't expect anyone to actually purchase the 800 euro Vespa,
Correct.
but they know that because people will see the 800 euro Vespa, then they will think that the 30 euro coffee is reasonably priced.
Okay. So
that is the anchoring effect.
So are you saying that we get hooked to a number in this case, and then we think of that number as a reference point?
Absolutely, bang on.
So I can see this happening in investors' financial life also. One of the example which I can think of is when people buy any share. Let's say I buy a stock for 200 rupees, and I don't want to sell it below that price, right? Because I'm so connected with that number. That number is in my mind now, 200 rupees. So even if the price comes down to, let's say, 190 or 180, instead of taking the loss, I want to recover my price, because that 200 is so much into my mind now that I can't get over it, right? So
exactly.
Yeah, so this is one thing I can think of in common investors' life. Is there any other example which can give, like apart from this?
I think the example which you gave is spot on.
Okay.
And the solution I would again give to people is that when you make a choice, base it on the inherent value of the item you want to purchase and your requirement. And don't let all these extraneous and other numbers throw you off the track.
Okay. Correct. Okay. So that was the first one, and I think you have explained it very well. What about the next one?
The next one I want to talk about is called the sunk cost fallacy.
Okay.
This is a little technical term, but I'll simplify it. Fallacy simply means a bad idea, and sunk cost means cost. If you let it go, then it is definitely sunk, as in you cannot recover it back. The technical word for it economists use is called divestiture aversion, which means you're averse to the idea of divesting something, as in you don't want to lose anything which you already have.
Correct.
And in even simpler English, it is called throwing good money after bad. As you take a decision, and you just want to stick with the decision and think, no, it will be fine, and you keep investing more in it, and dig yourself further into the ground. I guess the simplest investment example would be if I have a mutual fund with you, and you know it is categorically, consistently underperforming.
Correct.
Yet you keep on sticking with it. You don't cut your losses, you don't let it go and recover whatever money you can. You just keep on sticking with it, and after a while you lose all your wealth.
Correct. And one more, as you were explaining this, the one thing which was coming in my mind was endowment policy investments, like insurance endowment policies. There are a lot of people who have bought various kind of, money back plans and endowment plans. They have paid for 1 year, 2 year, 3 year. They have paid the money, and now even if you tell them that this is not a great policy for a long term, even if you continue this for next 10 years, at the end the returns will be very less. It's very tough for people to surrender the policy and take the loss, because they think, अरे 2 साल 3 साल मैंने भर दिया है पैसा, अभी वो क्या. So point is, because you have invested your money, because you have gone through that thing, you now want to justify, that no, that was a right decision. And I think this was one, like the example which you gave was also a great one. I think this fits very well into this sunk cost fallacy bias.
Exactly.
So how do one make sure that they don't fall for it? What is that mantra you give to someone? How do they think?
Cut your losses. Simple as that. If you think this particular stock, or even this money back insurance policy is not giving me returns, etc., so just cut your losses. Whatever you can retain, take it, invest it someplace else, earn more money. You recover the cost also.
So are you saying that we should trust the math in this case? Like whatever, we should just do the math, take an Excel sheet, put option A, option B, and whichever option Excel sheet tells us that this is better in terms of returns or money-wise, we should just take it without feeling that how I'm feeling emotionally. We should just keep out the emotion, right?
Manish, bang on. 110% you're correct. This should be a strict mathematical decision. No more, no less.
But tell me, why are people... It's so logical. I mean, I've put it very logically, but that is how it should be, right? Then why do people... I think people are smart. Like, it's not that people are dumb. But Manish, why can't they think like this?
Manish, the origin of biases and emotions is a very complex topic in itself, but a lot of it can be traced back to evolution. For example, why are young children so hesitant in trying out new foods?
Correct.
Because they are evolutionarily trained to avoid new things. Because let's say when we were cavemen and a young child walks out of the cave and he sees a new berry, etc.
Yeah.
They want to try it out. What if
Correct.
the berry was poisonous and they would die? So they are evolutionarily trained to avoid new things. Similarly, we are evolutionarily trained to avoid what we already have.
If I give you an example of non-finance, in our real lives also, if we take relationships, for example, many people get into bad degrees, like they are doing some bad course, for example, let's say a 4-year course, and they are already into, let's say, second year or third year. And even if they realize that this is not something they want to do, many people still continue that course because
absolutely.
they have done it for 2 years now. Let's complete it. Or for example, they are in relationship with someone and they now realize that it might not be the best decision. Still, I would say, I can't put the number, but I would say at least half of them still continue just because they have spent so many years with them.
Exactly.
Right? So if we give a non-finance example, this is how it is.
I think this is bang on.
Yeah, this is very interesting actually. So and we can find this in our day-to-day lives. Like if we go into details, we'll find it that we face this every day in a small way, if not big.
Manish, I promise you that after this podcast, your investors and readers will start noticing many of these biases themselves in their everyday life. They'll suddenly be working and suddenly they say, oh, hold on, I am gravitating towards confirmation bias or about this bias, so this is anchoring effect.
Yes.
They will themselves start noticing it.
Correct. Okay, I think the second one was also wonderful. Let's move to the next one. Which is the next one now?
Okay, the next one is called the confirmation bias.
Okay.
Now, confirmation bias basically means that we are attracted to those sources of information which confirm our existing belief. So, for example, a lot of people I know who are, let's say, want to follow the left-wing ideology, they prefer to watch NDTV. A lot of people who prefer right-wing ideology, they prefer watching Z News.
Correct.
A lot of people follow Facebook pages based on their ideology, and other Facebook pages, Facebook algorithmically does not even mention them on their news feeds.
Yeah.
So that is confirmation bias, getting yourself attracted to information sources, etc., which confirm your existing belief. And the investment problem in this simply would be that you believe, no, the stock market is too dangerous. We will only invest in FDs. So the people you talk to regarding investment strategies will be people who believe the same thing.
Okay.
Or if you believe, no, I will only invest in stocks, not even mutual funds, straight away I'll only buy companies and do day trading along with my day job. Then you'll talk to your friends who do the same thing. Whereas you should talk to people and get information from the 360-degree view.
Correct.
Then take a decision based on your need.
Okay. Can you give some more examples on this, like some non-finance example, maybe?
The best non-finance example, I can tell you this one itself, that people who, let's say, are against, who are very left-wing, or who are against the current government, etc., a lot of them I see, they watch only news channels which give mostly anti-government news.
Okay.
Or similarly, people who really feel that no, India should be tough on terrorism, etc., all that real propaganda, they would watch news channels of that sort. They would not even give credence to news from the other news organizations.
So if I rephrase this, if I want to rephrase this bias, are you saying that once we believe in something, then we will look for all the news and all the data which will try to confirm that same thing, the same belief, right? We will, and if anything contradicts it, we'll find all the reasons why it is a wrong data, or maybe it has come from a wrong source, something like that.
We will most of the times ignore it altogether. Just, this is useless, this is nonsense, and not even go into details, not even analyze it.
So if we give an example from politics, for example, so there are people who like BJP, and then there are people who like Congress, there are people who like Aam Aadmi Party. So followers of BJP, even if they see some positive news from Congress or AAP, they will just straight away say this is fraud, this is like rubbish. It is just, so they will not, because it is a confirmation bias. It is confirming what they are already believing. And in the same way, people who like Aam Aadmi Party or Congress, if there is some good news from BJP, they will just feel, nahi, ye to bas aise hi bana diya hai, this is wrong data, kuch bhi likh dete hain, because they
fake news. कई बार तो fake news बोल देते हैं.
Yeah, so it is fake news. So what it means is that anything which aligns to their belief they are more biased towards that information.
Absolutely.
As simple as that. So coming to finance, let me just think what can be a appropriate example for this. So many people, once they have bought a mutual fund, for example, and if they go and search for that mutual fund, okay, if they already believe that their mutual fund is very good, it's top performing, they will find automatically, they will come across all those news which confirms that point, that it is a good mutual fund, right? If some link says that no, this fund is not that great, or it gives 2-star or 3-star, they will just say, "Arey, isko pata nahi kya," like they don't know what they are talking about.
They'll give all sorts of argument. They'll say it's fake news, it's propaganda, it is paid news, whatever.
Yeah, got it. Okay. And in the same way, once I believe that something is very bad, I will automatically see all those things which is confirming that yes, it is that. As simple as
Absolutely.
that.
Absolutely correct.
So what is the solution for this? Like,
the solution for this is A, you have to recognize that you can make these mistakes.
Okay.
And B, get information from all sources. And C, take decision on merits, not just your random beliefs or attacks on the other person. But the solution has to be taken, the decision has to be taken mathematically on merits.
But Siddharth, this is very tough, I would say, because a lot of people, they take instant decision. Like something happens and I don't even I will not even realize that this is confirmation bias and I need to think logically. So what I feel is that as a general rule, if there is any important decision, I should not take it
for the moment.
At that moment, what I should do is I should write it down and I should say to myself, okay, fine, I'll not think about it right now. Let me go back home. Let 24 hours go, and then I will sit down and write pros and cons of each point and something like that, and then think about it. And maybe I can take views from 4 or 5 people and see that what others are saying.
I think you're absolutely right. And in economist language, you simply call it the cool-off period.
Yeah.
As in you take the data,
Correct.
write it down.
Yeah.
Writing down is very important, because so that your mind is not now burdened with the information and everything is on paper. Now brain is free to think. Write it down.
Correct.
Then cool off. Just forget it for a day or two. Yeah. Automatically your brain will tell you what is the right thing or wrong thing.
Mm-hmm. And the other thing is, we should be very open for to look something critically, right?
Exactly.
Like if there is some movie, for example, I should not believe that nahi, ye to bahut achhi movie hai, because if I already decided, if I go and watch that movie, I'll feel nahi achhi movie, even though everyone is saying nahi ye bahut bakwas hai. So I should be able to I should be open to that, right? कि ठीक है, नहीं कुछ गलत भी हो सकता है, या मैं जो सोच रहा हूँ उसका उल्टा भी हो सकता है.
Absolutely correct.
ठीक है. Okay. So let's move to the fourth one now. Which is the fourth one?
The fourth one is the halo effect.
Okay.
Now, what is this word halo? Halo is that golden circle you see above the heads of angels. So, for example, when you used to watch Tom and Jerry when you were young, whenever one of the characters died and they would go to heaven, they would wear this fancy white robe with a musical instrument in their hand and have this golden circle above their head. So, halo effect means that after we do something nice, we think we have become angels, and now we can do a little bit of naughty things and get away with it. A very simple day-to-day example. I know a lot of people who go to the gym, work out, come back and think, now we have worked out a lot. Today, we'll order Domino's.
I know, I have done that actually.
It's a very common mistake.
Yeah, so you, how do I put it in my words? So you do something and you overestimate its impact and then do something which negates it, right? Something like that?
Yeah, basically you think, now I have done a lot of good things. Now I can do a little bit of bad things. It's okay. It won't even affect the good things I've done. And many times this small negative things goes out of hand. Like for someone who's become very financially savvy and who is taking care of finances for the entire week, not overspent. And Sunday night he thinks, okay, today we'll go to the mall and have a good time. And he goes and splurges all his discretionary spending in one day.
Just because he has saved some money?
Just because he saved some money throughout the week, he has not made any irrational purchases. He is taking care of all his finances. He has gone through his mutual funds over the weekend.
Correct.
He has made sure his investments, etc., are in order. And then he decides, okay, now I've done a lot of work. I've been a good boy. Now I'm going to go to the mall and enjoy. And eventually ends up splurging thousands over there.
Correct. So they combine both the things you are saying. So I've saved and hence I can splurge. So they combine the both things and see it as one thing. Rather than that, we should look both of them independently and decide for them totally differently.
Exactly.
If I'm saving money, if I'm taking the decision, I have to take it separately. And why am I going to splurge? That has to be decided totally separately.
Exactly. So, for example, if you stick to your diet plan throughout the week,
Correct.
It doesn't mean that at the end of the week you go and have a buffet of 100 items and you ruin your entire work for the entire week, your entire diet for the entire week.
Okay. Can you give some personal example of
the best example I can personally give is there is a vegan restaurant in Carrots in Bangalore. I went to Bangalore a couple of months back.
Okay.
And I try and watch what I eat and don't tend to overeat. But because it's a vegan restaurant, I thought his food is organic and cruelty-free, so I can enjoy myself. And I ended up severely overeating.
Correct.
Calories are calories. They will make me unhealthy. Doesn't matter where they come from. Calories are calories.
True.
And I shouldn't have done that. I should have still, if I want to splurge a little bit, okay, I can order one dessert extra or whatever.
Correct.
But not having a 7-course meal.
Correct. So one thing I was watching, I think Discovery or some other channel, and they were talking about how this Diet Coke has very less difference in calories. So if I'm having a Diet Coke, let's say I will have 100 ml, for example, normal Coke, and this Diet Coke has, let's say, 90% of calories. It has less calories, but just 10% less calories. So now I feel that it has less calories, and just because of that one positive thing, I will over drink it. So I will drink let's say double of it, and eventually I will have more calories. So there is a theory which says that this calorie free, sugar free, because of all these things, people are actually eating more and they are actually increasing their calories. Just think about it.
Exactly.
It's so contradictory.
Exactly.
Okay. Great. Okay. I think so. I think the solution for this is again to think of two independent events totally differently.
Yeah,
right?
And stick to your plan. Like, for example, especially investments, it's not a matter of emotion over here.
Correct.
You have responsibilities to fulfill. Have your plan made out well before and stick to it. And in the plan, you can budget in some places. Like, if I save so much, then I'll have extra 10% discretionary spending. I'll increase my quota of discretionary spending per month for so-and-so. But then stick to it. Don't go overboard.
Yeah. Okay. Good example. Okay, let's move to the next one now.
Okay, the next one I'll talk about is the bandwagon effect. Bandwagon effect very simply means herd mentality. But everyone around me is doing something. So this thing must be correct because everyone is doing it. So I will also do it.
Now seems very correct also, like to me in the first instance. Like when you said that sentence, it seems very correct to me also. That if
It seems very logical, but if you look at the merits, it doesn't necessarily mean logical. A good investment decision is based on merits, not on democracy.
Correct. Okay.
In the sense, like everyone, like a lot of my relatives believe that FD is the safest investment, and stock market is nonsense. Everyone loses all their wealth over there.
Correct.
But because everyone sees that doesn't mean it's right.
Yeah.
Research, find out what are your investment horizons, how much money you have, what are your targets, and then decide. If you don't have time and you have short on time and even a little bit of extra will do, fine, FD is fine. But if you're a young person getting a salary right now, not too many expenditures, then get equity exposure.
Correct. Yes, I have many times I have come across people who have very bad policies with them. Most of the time, endowment policies. And when I ask them, why do you have this policy? Why have you bought it? They will not tell me that I researched about it. I did maths and I found that the returns are great. The common example is all my office people were buying this. So I bought it. So they feel that so many people can't be wrong at the same time. So let me be part of it, and if it is something wrong, if it is some disaster, I will not have. I'll say that everyone was doing it. It is fair. You will not feel ashamed of doing it because everybody was part of it, right?
Exactly.
Yeah. Okay. And in the same way, if we if we say that, many people are not doing it, then I will also not do it. It's again herd mentality only. Yes.
Herd mentality only.
Correct.
Right. The
Yes.
decisions have to be taken on merits, not on democracy.
Yeah. So rather than seeing how many people are doing it, like that is one good indicator of if it is good or bad. But I would say it is a secondary or a third point. Rather than that, I should first see the pros and cons of it, if it fits my case or not, if it is good for me or not, and then finally to just confirm if everything is fine, I can then look at the herd, that more people are doing it or not, but not as a primary thing.
Yeah, not as a primary thing. Like, see, these are personal decisions you have to make for yourself. In
Correct.
this, you don't get a voting done, right? These are personal decisions. You're not running a government. The
Correct.
decisions have to be taken on merits. Just because everyone in my family, let's say, is saying, no, FD is right, stock markets are bad, that's not true. Go research, again, since all these biases come together, don't just rely on the confirmation bias that I also believe that because of herd mentality, I will believe that FDs are safest, and because everyone is saying it, so I'm confirming it.
Correct.
No, go and research and then take a decision on merits.
Yes. Fine. Okay. What's the next one now? Let's move. This is the sixth one now, right? Next one is sixth one.
Yeah. So
Okay.
the next one is the proximity bias. Now, proximity bias means we are attracted to things which can be needs, problems, whatever, in the immediate future and not in the very long run. And scientists have studied this in very much detail. So there's something called the functional MRI, that standard MRI, but functional. In this sense, you put under the MRI and it gives live images of what is changes happening in your brain. And with the changes in chemical and different color variations, etc., you can figure out what you're almost thinking.
Correct.
So they showed people some problem in the immediate future regarding themselves only. They looked at themselves with empathy. But when they showed the same problem for the same person about, let's say, 30 years down the line, they had the same level of emotional connect of a stranger. In the sense, our brain almost views us as a stranger, us in the future, as a stranger, and we should not care too much about it.
Correct. So, if you will allow me to give, there are two things which are coming in my mind. I'll interrupt you on this. So, two things which are coming in my mind is, first thing is health, the area of health. So,
Absolutely.
in a long run, exercising, having a good diet, not eating too much of, fast food.
Junk food.
This is good for our future self, right? We will be healthy and all. But
it's in fact the best investment.
Yeah, so it is. So if you think logically, this is what I should do. Everyone should do that, right? But when I am going to a restaurant or buffet, for example, with my friends, I tend to overeat because at that moment I can't visualize, I can't think of that future, right? I can only,
Absolutely.
my only focus is right now, how I am enjoying right now, the taste, the pleasure I'm getting by consuming it. So I can't think of future. This was one example from the area of health. If we map this same thing to wealth, area of wealth, I would say most of the people fail to save for retirement or for future just because of the fact that they are not able to visualize what is going to happen after 30 years. If I tell a youngster who is, let's say, 25-year-old or 30-year-old that, save for your retirement, there is no picture which is coming in his mind, right? How a 5,000 rupees saving today is going to impact his future. He is not able to visualize it at all, right?
Exactly.
So I would say it impacts his saving because of this reason, and he's more focused on how I can upgrade my mobile, how I can go out on weekend, how I should watch movies and eat out and all those things. Now again, those things are again important, but at the same time, it impacts their future so badly that after 10 years of their working life, many people realize that, oh my God, I've lost so valuable time, and I've splurged like anything. I should have taken care. So I think this bias is coming here, right? Yeah.
Manish, they lose 10 years of cumulative interests.
Yes, correct.
Imagine that, what 10 years can do right at the end for your purpose.
Correct. So, but tell me one thing, this proximity bias, does it say that we should not do anything? It's not logical, right? I need to think of now, my pleasure now, my demands now, and also for future. So there has to be a balance.
There has to be balance. You have to prioritize.
Okay. So overdoing, you are saying, when we overdo, that is the bias, not a normal action, right?
the bias which I'm essentially telling you is that because people are more gravitated and attracted to immediate needs,
Correct.
they forget to take care of future requirements. And
Correct.
the health exercise you mentioned, health example that you mentioned.
Yeah.
So what a lot of doctors do in US now, they
Yeah.
take an image of the patient in the computer,
Uh-huh.
and they say, and the computer age it through the computer, and they say that this is you right now, this is a photograph.
Yeah.
If you don't take care of your health, etc., this will be you after 30 years, looking very aged, wrinkly
Correct.
and all,
Correct.
with grey hair and very unwell.
Correct.
And then they say you have to take your medicine. So if they just tell the patient to take their medicine and be healthy, the compliance rate was low. But
Correct.
once they showed the patient the computer-aged image, the compliance rate shot up because people started really seeing themselves how they will look in the future,
Correct.
and no longer just as a vague, abstract, stranger type image.
Correct. Fine. So what do you think is a common person do in his financial life to overcome this bias or to reduce the effect of this bias?
The two things which really come to my mind is start your SIPs from the first salary check.
Okay.
And start saving for retirement. Cumulative interest is the most magical thing in the world if you take advantage of it.
Correct.
First check. I honestly hardly know anyone who from the very first check started an SIP and started a retirement corpus, but you need to.
Yeah. So you are saying that take the actions which takes care of your future, and then whatever is remaining, you do spend it every month. That is
exactly.
Yeah.
No one is saying don't enjoy, don't eat out, don't go out on the weekend. No one is saying that.
Correct.
But just budget. For example, you get 100 rupees. So some goes for your everyday, etc., bills, rent, food, etc.
Correct.
Some you should take out for your future, some for health insurance, etc. And then whatever remains, sure, that's a discretionary spending. Go enjoy.
Correct. Okay, great. So now let's move to the next one. I think we are going a little slow, right? Let's go a little faster. So which is the next bias?
Okay, I'll do two then together. There is called the recency bias and the negativity bias.
Okay.
These two I alluded right in the starting also. Basically means that we are attracted to recent news which has just come up, and especially negative news. This impacts investors how? Let's say stock market crashed for whatever reason, or some company tanked.
Yeah.
Then everyone's like, oh no, this is recent news and this is negative news. No, we should not invest in stock market. This is dangerous. And let's just go for FDs for long-term wealth creation. Wrong decision. Take it on merit. Stock market goes up and down.
So is that the reason why media and all the news channels sensationalize everything? They will show negative news more than positive news because that sells.
Absolutely. Right? That sells, that attracts more people. The more people attracted, the higher TRPs. The higher TRPs, the more ad revenue.
And I'll tell you one very interesting thing. Most of the financial products which are sold in the market, they are sold with putting fear. Like they make people fearful. So they will say things like, what will happen if you die? What will happen to your family? So take the term plan. What will happen in your retirement? You will be like living like a beggar. So start saving right now. So the basic way of selling is in a negative tone. And I think, and I'm not sure if it is right or wrong, because if that impacts people's mind, if that is how like people will buy, then I think it is for their good. If I tell something good and try to sell a retirement plan and people don't buy, it's fine to sell it on a negative news. What do you think about this? I don't know how you feel about it.
The answer to that is yes and no. As in, fear is important for long-term things. For example, retirement. What will you do if you don't have money? You'll have to live with your children. You'll have to depend upon them. No, save for retirement. So that is fear. And that is justifiable, and that should be the case. What I'm telling you in recency and negativity bias is that recent and current news make our decision-making process more skewed towards the recent events and not the long-term events.
Okay.
So
Now I
the stock market, so just because we saw recently the stock market crashed, we take a decision. No. Stock markets are bad. Stop our SIPs. No, take the news in the long term. The stock market in long term gives higher returns than sometimes real estate.
Okay. Yeah. Got it.
The next one, Manish, I'll quickly tell you about is the status quo bias. Now, everyone knows what status quo is. Let the situation remain the same as it is.
Yeah.
It basically means that we are again averse to changing too many things. We think, chal raha hai, theek hai, what's the problem, etc., etc.
Correct.
And that should not be the case.
We want
Just
to take the path of least resistance. Right?
Path of least resistance. Arey, chal raha hai, theek hai, what's the problem, etc., etc. No, it doesn't work that way.
Correct.
It's the mathematical decisions which affect your health and wealth.
Yeah.
Simplest example, one should analyze your mutual fund portfolios regularly. Just because they are complicated, etc., is no excuse. Take out one Sunday afternoon after lunch, tell everyone 1 hour, don't disturb me, turn the phone off, and do your analysis. Don't just say, no, chal raha hai, theek hai. Doesn't work.
One example which I can think of is if you are into a job, for example, if you are doing the job for, let's say, 2-3 years, everything is set, you're like comfortable in an office, and if you get a new offer, for example, many people feel, "Arey, nahi, theek hai, ye office badhiya hai, thoda sa change ke liye, why should I move?" Which is right in a lot of times.
In some ways.
But many a times what happens, people are so much into their comfort zone, they don't want change, and they lose on so many opportunities which could have taken them so far in their career.
Exactly. In fact, studies show the same thing. The people who change their job, not job hopping, but do change their job often on, depending on opportunities and skill growth, etc.
Correct.
They end up earning much more. I think this was a study in American Quarterly Journal of Economics.
Oh, that's a great example. Okay. So I think the learning from this bias is that we should not get comfortable with one position or in a situation, and we should like change. I don't know, like if I'm putting it in the right way.
I'll put it more accurately.
Okay.
If you're comfortable in a position, enjoy the comfort. That's the point of working. You don't want to be tensed all the time.
Correct.
But when you do get an opportunity, decide on merits. Don't just think, chal raha hai, theek hai, no problem. And what you already have, keep reviewing it. The comfort is great. But don't come into a false sense of complacency. Do review what you have. Your mutual funds, investments have to be reviewed. It's not like we put it and just forget about them completely.
Correct. Yeah. Okay, let's move to the next one now.
Okay, the next one, again, I'll deal a couple together. In economics, we say information overload and attention deficit. That when there's too much of information on you, you get overloaded, because of which your attention goes down.
Correct.
Or in other words, because there is so much of analysis in front of you, you get paralyzed. Analysis paralysis.
Correct. Yes.
So, I guess a good example I can give you of this is this American company told their employees that, okay, listen, on our expense, the company's expense, you can buy some mutual funds for your retirement. And they gave them 3 options. 75% of the employees selected a mutual fund. As in out of 100 people, 75 employees selected a mutual fund.
Okay.
But when they increased the number of choices from 3 to 10, as in they said, now you have 10 mutual funds, decide one of them.
Correct.
Only 25% people selected.
Yeah. Maybe they are afraid of choosing the wrong one.
And they're afraid of choosing the wrong one, or like in this particular bias, there's just so much information, they don't know what to do and they get paralyzed. As opposed to the simple example where you only had 3.
I know. I'll tell you my personal one point. I love to go to those restaurants where the menu is very small and
exactly.
If I go to some place and there are like 383 items, I get lost. Personally, I get lost. Even though I know what I want to eat, still I am not able to decide because I feel अरे नहीं कुछ और अच्छा हो सकता है चलो
ये होगा वो होगा.
Yeah, and then at the end, if I order something and if it doesn't turn out to be good, I feel so bad because I feel, oh my God, I should have taken some more time and I could have ordered something better. So I really love to go to places where even if there are like 10 or 20 items, that is fine. I love to go to those kind of places.
Simple example, one more example, look at the iPhone. They have 2 variations. Simple.
Yeah.
Someone who wants iPhone just has to choose between the plus and the normal size. That's it.
Correct.
Whereas if you go for a, let's say, Samsung phone, God knows they have so many phones.
Correct. Yes.
You don't know which one to take.
Correct. Yes. So one point I want to know is if it is better to make something simple, even though it is less powerful, compared to something very powerful but very complex, because that will not sell.
If you're looking from the point of view of sellers, that's exactly what I'm saying. The
Okay.
more choices you give,
Yeah.
the more hurdles you create for the customer to cross before he does your purchase.
Correct. Okay.
Keep it simple. Give 2-3 options. End of story. No more than 3, I would say.
Yeah. Okay. ठीक है. Anything else you want to add in this particular point, or we should move to the next one?
I think we can move to the next one. And Ismail, I'll just say that, again, investors, let's say I'm just a new person. I just got my first salary check and I decide to invest in mutual funds. Now what to do?
Yeah.
Now, rather than opening Google and getting overawed with all of these information, go to one or two reputed place,
Correct.
find a good funds or hire someone to help you in it, and then take a decision. Don't just bombard yourself with data and studies and this and that. But
very good example, I would say. One thing which I can add here is, I see many people who come to us also, and they come to ask questions also, that which is the best term plan? Okay, which is the best term plan? And they use the word best in capital letters. I'm saying that because they want the best policy. Now, what they do is they go to different companies' website, compare them, get the code, they go and see the terms and conditions and everything, and finally, you know what they do? They don't do anything.
No, exactly.
They feel अभी बहुत ज़्यादा हो गया. Let me do one thing. मैं next month खरीदता हूँ. अभी छोड़ो.
Exactly. And that next one never comes.
And from one day it becomes 1 month, and there are many people who are waiting from years to take a term plan. Now just think what happens if something happens to them. Their family will suffer. Rather than this, rather than choosing the best one, what they could have done is take 2 options, let's say for example, and then randomly pick one of them. I'm saying randomly because deferring the decision and taking it after 2-3 years, it's much better that you take any policy. At least in term plan, even in health insurance. In health insurance, fine. There are few things you need to look at, but rather than over-analyzing and taking many years to finalize one policy, it's much better to take any good policy. Take top 2 or 3 policies and just pick one of them. That is much better.
I fully agree with you. In fact, Voltaire, the French philosopher, said that the best is enemy of the done.
Correct. And I'll tell you one more very interesting point which will also help our readers. There are many people who want to invest in mutual funds, right? They invest in fixed deposits and they want to get better returns. Now, there are around 2,000 plus mutual funds. Okay, I don't know exact numbers, but if you just list down all the mutual funds, now there was a study done, I don't know when, but maybe 1 year back, which said that the worst mutual fund out of 2,000 mutual funds, the worst mutual fund gave returns better than fixed deposit. in a particular time frame, let's say 3 year or 5 year, I don't know.
I agree.
If one had chosen the worst mutual fund, even then they would have beaten the FD return in a 5 year time frame, or I think 3 year. I don't remember exactly, but this was the case.
In a long enough period.
In a not very long enough period. It was some 3 or 5 years only. So imagine someone in 2010 wanting to invest in mutual fund, and because of so many mutual fund and over analysis, they would have not taken the mutual fund. They stayed with FD. They would have lost the money.
They would have lost the money.
Yeah. So anyways, so let's move to the next one. I think this is the last one, the one which are going to show.
This is the last one, and I'll quickly touch one after this also, but this is the main last one.
Fine.
This is called the snowflake fallacy.
Okay.
Now, what is snowflake? Snowflake is a very small, tiny piece of snow which falls on the ground in winters. And if you look it under the microscope, then snowflakes are like fingerprints. Each snowflake in that particular crystal is unique. All over the world, everyone is unique. So similarly, we think we are like snowflakes. We are unique. We are like a fingerprint, absolutely separate from the entire world. And normal rules don't apply to us, and we can conquer it all, etc.
Correct.
And this false beliefs leads us into doing things like, even though we are not professionally trained into it, or this is not a day job, but thinking, no, we will now invest in straight up company stocks and not go for safer options like mutual funds.
Okay.
And we think we can conquer the market, etc. And over time, you lose the money and the opportunity cost lost of the investment you could earn in mutual funds. Like even Isaac Newton wasn't able to beat the stock market. In fact, in 1720s, on a South Sea company, he lost equivalent of now $2.7 million. Even Isaac Newton wasn't able to beat the stock market.
Correct. Yes, I have read that story. So are you saying that we are generally overconfident? Is that the gist of it?
Absolutely.
Okay.
We think we are completely unique, master of the universe, like fingerprints.
Correct. I can give you two quick examples. I was reading this book from Dan Ariely. I think the book was Upside of Irrationality, or the other one, I don't. So he was talking about, if you take a random group of people, let's say 100 people in a room, and you ask them that how many of you think that you drive better than 50% of the people. So almost 100% of the people raise their hand.
Exactly.
Everyone thinks that they drive more than the bottom 50%. However, that itself is not true. Obviously,
mathematically not possible.
Yeah, mathematically not possible. And in the same way, all the people who start the business, any new startup, any new small business, they all think that they are working on a next $1 billion idea. Everyone feels that they can't fail, they will not fail, they will list down all the reasons, they will list down all the positives and everything why they will succeed. And I think as per statistics, what we know, I think only 1 out of 4 business exists after 3 years, if I'm not correct.
Exactly.
So it is definitely, overconfidence, and it is in all the areas of our life.
Even in professionals, in US they did a study with divorced lawyers.
Correct.
And when 2 divorced lawyers were getting married to each other, they asked them individually, what are the chances your marriage will fail? They said no chance whatsoever.
Correct.
And most of the marriages failed.
Yeah.
These are professional divorced lawyers who do this every single day, and even they miscalculated the chance of their marriage surviving.
Correct. Great. So what is the solution? Like, how do we tackle this? A common man.
Hope for the best, prepare for the worst.
Correct. Okay.
Simple as that.
Or I would say, whatever you are estimating, cut down that by 50%.
That's true as well. You can cut down whatever your investment, your estimation is. You can cut that down.
Yeah.
And also, don't, because you think if perfect, no problem will happen. That gives you give it a blind spot to possible issues.
Mm-hmm. Okay.
So even if you estimate by I can do so and so, it is based on some assumption that the problems will not arise. Now it is your duty, if that is your estimation, to find all the possible problems which can arise and preemptively make sure that they do not arise.
Okay, great. Okay, so which I think you are going to talk about one more.
Just one last one I want to quickly tell. And
that will be the bonus one, I guess.
Yeah, that would be, I guess, the bonus one, is lifestyle inflation. In technical terms, it's called hedonistic adaptation. Hedonism comes from the philosophy of pursuing pleasure, and adaptation means adaptation. In the sense, with more salary you get, automatically your lifestyle costs or a pleasure, etc., increases. You won't even notice it. A simple example would be, let's say you on a particular salary, you have a nice 50-inch LED.
Correct.
With a salary increment, you decide, let's get a 60-inch. After that, let's get a 4K. After that, let's get an Android enabled. Over time, you won't even know how much your everyday expenditure has increased from basic requirements to even enjoyment to even extra.
But that seems very natural to me. I mean, as my income is increasing, my expenses are bound to increase.
They necessarily do not need to. Now, for example, if your income is increasing and you want to get that 60-inch 4K Android-enabled LED, this means you have to work extra in the office to pay off that EMI. The very same hours you could have just spent watching the 50-inch LED with your family.
Correct.
I'm not saying you increase your lifestyle, etc. is bad per se. No, I'm not saying that.
Okay.
But just look at what are the costs of it involved.
Okay, so maybe you are saying that even though we don't need it, just a mere oversupply of money or extra supply of money tends to believe that, we need something.
Exactly. And also because your lifestyle inflation is there, the amount you save despite the higher salary remains the same, which affects your retirement corpus. We need to understand that no longer at 60 you can decide by, okay, now we stop working, because the average life expectancy is increasing now. You might have to work beyond it. And if you want the entire your retirement corpus to last, let's say 2 decades or 3 decades, then you need to save more.
Correct. I think this bias is the one which most of the people will relate most.
There's a very famous US study which also says that they track the happiness in the index of various people. And they noticed that around $75,000 a year, you are most happy. After that income, it is only more things. I personally believe that things are thieves of time.
Correct.
The more things you have, the more time they will take to maintain, clean, etc., etc. The same time you could spend with your family.
True. And I was actually I'm actually working on an article. I'll just share that with you. I'm going to write on why you should not buy a very big house. And one point which I was going to put into that is just because you buy a very big house, now you have to buy a lot of stuff also to fill that. So you need to buy a lot of sofa, a lot of, like in the kitchen you will have to buy so many things. So if you have if you can do with 1 BHK, there are many people actually who are okay with 1 BHK, their life will go on very well, but they still buy 3 BHK and now they have so many things in their house just because, you can't keep an empty house. You have to fill it.
Exactly.
Right? And then you have to maintain it and then you have to keep replacing it, and this is how people mess up their expenses. So, yeah.
In the house, it's also security. There's a lot of people I know who are very happy living in a flat. And now they have to hire 3-4 extra people to clean, maintain.
Correct.
And one day, one of these extra people robbed them.
Yeah. True. Correct. So I think, so have we completed this bias?
Yeah.
Anything else?
All the biases are completed. Now, I'll just quickly jot down 4-5 points, which investors can remember.
Okay.
To counter all of these biases. Because, these biases don't attack you one by one.
Correct.
It's the confluence of factors, multiple of them together at the same time.
Yeah.
So what to do? You have to, have a job also, have responsibilities, family, etc. You can't just imagine sitting entire day and keep doing these calculations.
And I think out of 100 times, only 4 or 5 times we must be thinking rationally and logically. Rest 95% of the time these biases are at play.
Exactly.
Correct. Okay.
So a couple of things I'll just tell your readers. Number one, now that you know all these things, you have to, first of all, accept and acknowledge that you're not perfect. Our minds make decisions in ways we don't even understand. So, and once you accept and acknowledge that, now you will start noticing these biases and automatically correct your behavior. First thing, accept and acknowledge. Number 2, never buy anything spur of the moment. Health insurance, mutual funds, big TV, anything. Nothing to be bought spur of the moment.
Correct.
Don't buy anything when you're sleepy, hungry, or irritated.
Yeah.
Write it down. Whatever your requirements are, budget, etc. By this month, I will keep out 10%, 25% of my salary to spend on like movies, etc., etc.
Yeah.
All this has to be written down and make yourself accountable. Give all this written down to some of your family, friend, spouse, wife, whatever.
I'll quickly interrupt you on this. When we go to shopping for the shopping, for the groceries and all, my wife makes a list of all the things which we want. She exactly writes down that, these are, let's say, 15 things we want or 20 things we want. I think many people do it, but I'm just sharing it. And we go and we exactly buy that much only. And if we don't go with the slip, then oh my God, if I'm going to buy a packet of chips, I come out with items worth ₹1,500.
Always happens, and this is very common.
Yeah, true.
Always have a list prepared for your budget, for your shopping, whatever. Write it down and give it to someone who can hold you accountable. Why did you increase this thing? Why did you go beyond the budget? Now explain. This will automatically make you accountable for it. One more thing I'll quickly say is sleep over it. Before I make a major decision, get all the data, little bit make up your mind, and just forget it for a day or two.
Correct.
After a day or two, you'll get the right idea in your head.
Yeah. Correct.
So these are the main points I would tell your readers.
Okay, so I think that is all, Siddharth.
Yeah, that's all.
Great. I think it was a wonderful talk and we came across a lot of things.
Yeah, that's all.
Great. I think it was a wonderful talk and we came across a lot of things. There are many things which were wonderful and, few things were new to me also. So I think this will be a very valuable talk for most of the people. So thanks a lot for taking out time for this, Siddharth. And maybe we can again, touch base and talk on some other topics some other day.
Yeah, definitely. If your readers have questions, we can do another podcast and just discussing the questions and biases.
Sure. Okay, Siddharth, then that's all. Thanks a lot. Goodbye.
All right. Thank you so much, Manish. Take care, buddy.
Thank you.
Take care. Bye.